So I just wanted to thank everyone for joining us today and joining our Orr Group talks, where we'll be focusing on crypto philanthropy. Many of you know us at Orr Group, but for some of you who don't, we are in the business of philanthropy. Our firm has worked with nonprofits for 30 years and has continued to evolve our business offerings with this dynamic sector we service. We partner with nonprofits organizations on everything from designing development strategies, serving as part of your development team, campaign management, events, and even talent recruitment. As consultants, it's critical that we're very aware of emerging trends and opportunities for the nonprofits we work with. And our talk series is one way we share our expertise within the broader community. We know that there are a lot of questions that have been coming up about crypto philanthropy and cryptocurrency and NFT auctions and blockchain. So we're excited today to welcome Pat Duffy, the co-founder of The Giving Block, to help answer some of these questions. We have actually put together a number of some of the biggest themes and questions that we've heard from nonprofit organizations who are considering accepting cryptocurrency. So we'll focus on those, and then we'll head into an extended Q&A section around 1:40, 1:45 to make sure that we can get to all of the many questions that you have. So as we're talking, please just include those questions in the chat, and then we'll get to them around 1:40 or 1:45, and we'll really try to get to as many questions as possible. Of course, if we don't get them today, you'll be getting our contact information as a follow-up along with the recording of this session. And so feel free to reach out to us to continue the conversation. We're really excited about it. So Pat, why don't we start with hearing more about you and the focus of the Giving Block, and then some of the major trends that you tracked in 2021 in the crypto community.
Yeah, absolutely. Thank you everyone for coming. I'm Pat, co-founder of the Giving Block. The main thing we do is we help nonprofits fundraise crypto. So primary solution provider for accepting crypto, converting it to US dollars, issuing tax receipts, dashboard and data and analytics and all that good stuff. And then secondary item is bringing crypto users and nonprofits together. So there's like an active strategy component we do with charities where we build crypto philanthropy programs. We're getting close to 200 six-figure plus programs, which we're really excited about. So like just consistently building crypto into a fundraising pillar versus like pop up a donate crypto option, let the chips fall where they may. And then on the donor side, we build a lot of that connective tissue for them as well. So we built and run the main crowdfunding platform where donors look for charities and they're giving crypto. Launched the crypto giving pledge, which a lot of the main exchanges and high net worth crypto players have taken that and give through that program. Created the Crypto Giving Tuesday campaign, a community campaign off of the Giving Tuesday Foundation, and then a bunch of other campaigns and kind of CSR partnerships with the companies in the space. We run like the X company gives day, or create kind of their employee giving portals and all down the line. So a lot of anything in between charities for the most part, and the crypto community, we try to build all that stuff out. And then in terms of trends, I can jump right into that, or do you have like specific questions you want to start off with?
No, give us from your perspective what you saw, what we've been hearing. Like, it's hard to find, a point of truth on this. So would love to hear some of those things that make us understand if we should really be paying attention to this or not.
Yeah. So there's like crypto trends, I guess, and then there's like the crypto giving / the crypto philanthropy trends. On the crypto trends piece, just at a high level, like one of the big numbers would be the 300 million number that like different reports are saying we're past that in terms of total number of crypto users. Some are saying we're still just below. But that's in keeping with or just past now the total PayPal user base. So that was like a big, I guess, milestone for the industry. We're either just past it or about to hit that. So in terms of the total number of users, I think that's a big context thing that nonprofits are missing. Like 300 million is a lot of people to have like a preferred donation method that isn't available in a lot of solutions. Market cap and market dynamics, like very volatile last 12, 18 months. Important piece is it's a long-term capital gains offset donation method. That's the main thing here, right? If it's appreciated in any way, shape, or form, it's more incentivized than cash or a credit card. So what we're seeing as of last year was like a big surge in cryptocurrency giving as people kind of learned about the tax incentives. We have now at least 2 crypto tax software companies that have become unicorns in the last 12 months. So that's driven a lot of tax literacy from crypto users and like making this form of giving more popularized because it's a great tax offset opportunity. And then, yeah, in terms of like the actual donation volume and the trends, like we as a platform went from 120 clients at the end of 2020 to just past 1,200 at the end of 2021. So about 10x in a 1-year period. And then still the average donation program, like total fundraising volume on the crypto side went up over that period. So like the growth in donation volume is outpacing even a pretty rapid nonprofit adoption. That plus NFT fundraising, which I'm sure folks are going to want to get into, and then like the institutional side of things, a lot more high net worth older folks are getting into crypto. So 95% of hedge funds now, right, like either have crypto or they're diversifying into it. These are like big sort of indicators. So we're seeing a lot more kind of 7-8 figure donations going through donor advised funds. So like Fidelity Charitables, like one of the bigger groups that we're working with in this industry, and they did not 400 million in crypto donations, but relatively close, somewhere between 300 and 400 million in crypto donation volume last year.
What was the total amount donated last year in crypto? Do you have those kinds of numbers so we can understand the scale of philanthropy happening here?
We're working on it. There's a couple weird variables to get into. Well, one thing is like there's not a lot of data out on this yet, right? So like in terms of the number of 501c3s that are fundraising crypto actively, like they're out there and like that they take crypto and they're, you can find them on the internet. Like the vast majority we're working with directly, but there are like one-off donations that get made in crypto that aren't publicized, where like a donor will find a nonprofit, they'll set up like a makeshift solution, or they'll just like send it to a wallet or something and then reconcile it kind of off the grid. So like we're trying to get out there and find what those numbers look like. And then there are donor advised funds, which don't always necessarily publish like which exact donation method is coming through when they look at their non-cash assets. So if Fidelity is any indicator, then you can kind of extrapolate from there and look at donor advised funds that are also equipped to process crypto donations. I think last year is probably maybe a couple dozen total is what we set up just on the donor advised fund front, but there are a bunch out there that we just don't know if they're taking crypto or doing something else. And then we had a really big donor, Vitalik Buterin, the inventor of Ethereum, and they had publicized donations from Vitalik. One donation in particular was publicized as being over $1 billion as an individual transaction, but it was a very volatile asset that was going through a spike that was kind of driven by the transaction to begin with. So there are reports that donation was worth anything from $20 million to over $1 billion because it was this crazy kind of meme token that they popularized with this one-off $1 billion gift. So we're trying to reconcile that. So in short, we're going to do an industry report that'll be going out in the next couple of weeks. We're trying to get the right number, but we're like right now in terms of trackable donations, we're trying to figure out if it's like below $1 billion total in terms of like actually reconcilable or just above that $1 billion number.
All right, so it's pretty big scale is what you're saying. And I know one of the points that we thought was really interesting was the average gift size in crypto philanthropy. Could you talk a little bit about some of those numbers? And I see we're already starting to get great questions, so then we can head into some more detail after we sort of set the stage around this.
Yeah, average donation size in the industry, like different reports have a different number. I think one says 128, one says 111 or something like that. I'd have to go look at exactly what they are, but average digital gifts usually look like something in that range. For crypto donations on our platform, across the whole year, it was just about $11,000. It was like $10,500 until end of year, and then end of year was over $12,000 as the average transaction size. Main driver for that is the tax incentive piece. This is like a funny thing too, where we see like when we do integrations with different nonprofit solution providers or like plug in the crypto giving option. We see people taking missteps, like trying to add like a monthly giving option for crypto, whatever else it might be, which is sort of reconciled with an average gift size of $50, $100. So it's weird to kind of break that less intuitive donation process nonprofits build their own options too, because sometimes they'll be like prompting with buttons that are like, you want to give us $50? And it's like, you shouldn't be sending a donor who's doing like a tax offset gift. That's usually like 5 figures plus in that direction. But yeah, anyway, long story short, it was about $11,000 per gift.
So $11,000 on your platform with the nonprofits you work with. And then you were saying broadly, the average gift was lower than that. We've got a question in the audience just from a little bit of articulation, like $118 or $118,000.
Oh no, sorry. Average, I'm trying to think, like online donations in general, like when you look at US dollars, like credit cards and transactions that are sent to nonprofits, like the nonprofit industry reports put those numbers out every year. And I think it always floats just above 100. It's usually
okay,
like 111, 128. So like when you're taking a credit card donation for the most part, that's like the industry standard.
In the nonprofit sector is about $100. The average size gift that you're tracking on your platform with crypto donors, to people who have holdings in crypto philanthropy, is about $11,000 per gift.
Yeah, and then we'll need to look at like our DAF partners and like other platforms, average donation size to reconcile that. I don't know of anyone else's number being public, but I think it's probably pretty consistent.
Well, it sounds like it'll be an interesting report. Obviously, we would love to see that when it comes out and talk through that further. I've got a question actually right now about some of the market volatility that's been happening recently. And as fundraisers, we're obviously really paying attention to that and even cautious maybe about talking to some major donors right now about their gifts because of what's going on and some of the risk aversion they may have. Is it the same with crypto donors? Like is the market volatility, does that affecting them right now? Or do you see that they have a different approach because it just inherently is a more volatile market in and of itself?
Yeah, I mean, yes to both. So it's like it depends on the donor's position on an individual basis. So like in short, crypto is the best performing asset class of the last 10 years. It's also the best performing asset class of the last 5 years. So even if the market loses 80% of its value, it's still up on a multi-year period because it's gone up so much in short. So like there's a ton of crypto donors that like even in bear markets, like pretty much what happens is that'll drive them to exit positions and then accumulate capital gains tax burdens, which increases donation volume for us. So like when the market starts kind of dumping, we see surges in donation volume. And then when the market starts like really booming, we see surges because pretty much like if you're thinking about making a crypto donation and you have a Bitcoin that's worth $30,000 a unit, then when it gets over $60,000 a unit, you're like, this is a great time to make this transaction because you think it's like inflated, or it's like this is what I actually think this is worth, versus like when it gets too far below a number, you're like, I don't want to make the transaction now because it's really in my head still worth what it was toward the top. So like anytime you see a surge in one direction or the other, if they're going to exit a position or enter a position, that prompts behavior. But like a really important thing for nonprofits to note is like the more volatile a market, so long as you're not holding crypto, which is still exceedingly rare for even nonprofits we work with, the more volatility, the better, right? Because all you're looking for is V's in the market. The further down it goes before it goes up, that means the greater appreciation there is between the time they bought it and then the price it is now. And that's what creates the tax incentive, right? Like if I buy Bitcoin for $1 and it's worth $1 million today, then that means if I try to sell it, I'm going to owe the IRS and state taxes combined something in the range of $300,000. Or I could give that $1 million in crypto to a charity. I get the full $1 million write-off. I pay none of the $300,000 in taxes, and I take the $1 million I have in the bank, buy $1 million worth of crypto, and now it's at today's cost basis with zero tax liability. So, in short, like if it goes down really far for a long time, then we'll definitely see like a dip in donation volume. But that dip is what's going to create an incentive to give crypto over stocks or credit cards once the market bounces back. So like even if it never goes any higher than it hit last year, if it just keeps dumping and returning back to this position, every single one of those V's, anyone who buys anywhere in that bottom 50th percentile has like a very hyper incentivized crypto position to donate specifically to charity.
So when we had an opportunity to talk about this earlier this year, and I learned this, it seemed to make so much sense to me around a tax incentive for donors to be thinking about donating crypto philanthropy. And what you just outlined, I think, is really important. We're getting a couple of questions from our audience members who are asking about your services and how you work with nonprofits on either liquidating or holding cryptocurrency that may be donated to them. And I think it would be helpful to hear too why you even decided to focus on the nonprofit sector with this technology in the first place.
Yeah, for the second piece, I mean, just got lucky, more or less. Like I was working in the nonprofit sector. I was working for a nonprofit at the time, and then got into trading cryptocurrency. And we just identified the tax incentive that there was nothing built for nonprofits. So I guess like an important part of, I guess, like why it came to be, like the way that we built it is pretty much we went to the nonprofits who are already accepting crypto instead of nonprofits who weren't. So like we didn't build a technical solution or a support team or services that layer on top that were designed for nonprofits who don't know anything about crypto. We started from the high end and kind of back down in to the lower end of the markets, that we were able to create kind of like a user journey to ramp programs from like you're first taking crypto into turning it into a consistent revenue channel. So like 28 out of our first 30 clients, we just picked up off of like a BitPay or a Coinbase Commerce. They're using kind of like Shopify's, but for crypto, where it's just like, it's the tool that you can take crypto in through. But there's nothing outside of that. Like if the nonprofit has a nonprofit question or the donor has a donor question, like the support engine isn't designed for that. There's no services, there's no process. So it's just like, you're kind of on your own. So what we did is we just built, like really focused on like the support and services side more than anything. We kind of mirrored the original version of like a BitPay or Coinbase Commerce. And we just built that over an institutional exchange account and then started like adding functionality and things on top to then build a superior product as like a secondary consideration, after pretty much making it like, how can we reduce the amount of time it takes to open one of these accounts? How can we turn this application into something that's designed for nonprofits specifically? How can we like brace a team or a board or the marketing folks to like not head in these wrong directions that are gigantic time sucks, and to like take these certain actions that are non-intuitive? You know, search engine optimizing your donate crypto page versus like integrating it into your regular donation experience and maybe causing a ton of friction. So we just kind of went from there. And then the secondary component is like learning how nonprofits fundraise and plugging crypto in instead of designing a one size fits all crypto plan. We had a lot of nonprofits who were like really pumped about crypto, and we just got to be like fun police, where they're like, okay, we're with the giving block now, let's do like an NFT drop. But it's like, no, we have to mobile optimize this donation experience and, you know, figure out what your crypto fundraising identity is. And,
a great question we're getting from the audience, and something I know you have a great expertise on. Could you tell us about how nonprofits should be making the decision organizationally to accept crypto donations, whether or not they want to do that or a donor is coming to them with an opportunity? You know, what are the kind of milestones that you see as far as readiness goes for a nonprofit organization that they need to be thinking about? And then why don't we talk a little bit about the upside of accepting cryptocurrency, and then spend some time talking more about the risks and considerations that organizations need to think about as well. So tell us a little bit about some of those milestones that everyone on the Zoom today is thinking about.
Yeah, that part is like pretty easy, actually. Like whether or not you should be accepting crypto as a baseline, not how much time you put into fundraising crypto or how you should fundraise it, but like whether or not your organization should be equipped to take this type of donation. The two main things we look at is like, are you good at fundraising and are you good at the internet? Like in some baseline fundamental sense. So like that's the main two things we talk about. If you are a nonprofit who's looking for like a lottery ticket, like a get out of jail free card, which something like crypto, it's flashy, it attracts that, right? You get a lot of organizations that don't have a stable revenue budget. They don't really have an individual giving program. They don't steward their donors. They run like one-off events and they never follow up with anybody. And like they have a dead Twitter account from 2 years ago they've never used to post on. It's like those sorts of things need to get done first. But like you don't need to have a big budget or a sophisticated program. But like if you're using social media and like in a consistent sense, it's just like slow building a following, and it's like you just get how that side of the house works, and you know how to like get a donor to give you money based on a call to action across like the basic channels of like an email campaign or whatever else it is, then you should definitely be taking crypto. Then it's a matter of like a secondary consideration, like how far in do we go on crypto to begin with? Like, should we really try to like kick this thing off and say, hey, we're really early on this crypto thing. There's a lot of money out there, and it's like a very underpopulated marketplace from the nonprofit side with tons of donors that are not being disproportionately having their needs met. Are we the organization that should be really actively pursuing that? Because that's energy we can also try to fundraise in other ways. It's like, is this where that energy should be going? That part of the equation is more complicated. And it comes down to understanding how you fundraise and if you're well positioned. If you're like a tech-centric nonprofit teaching women to code blockchain in the San Francisco Bay Area, right? And you've got a board of people who fundraise and they all came from Wall Street. It's like, yes, okay, crypto should be one of your biggest priorities. But if you're like a small animal shelter out of like Wisconsin, but you've got a really active YouTube channel and like some of the stuff you touch on goes over like tech that helps animals, like you might actually find a pocket in there where you should have a fundraising pillar that plugs into, say, your end of year campaign, and you're in a really good position to be successful. Other folks should really just like add the option, follow baseline best practices. And if they start getting traction, then reinvest capital into crypto fundraising because you're getting a proportionate result. That part is very messy. Whether or not you should take crypto is kind of that conversation is more or less over. If you're ready to take standard donation methods, like if you're thinking about Venmo, that you should think about crypto, just put them in order of priority and then add payment methods as you see fit, crypto being one of the standards.
People are asking about some of the similarities with accepting stock gifts and your gift acceptance policies. Can you talk about some of the parallels there from your perspective? And then what you've seen or what you've advised on as far as updating gift acceptance policies to include crypto donations and how you help organizations communicate that, in the right way to donors.
Yeah, if you're changing your gap now to like include stocks, you should probably just include crypto and other non-cash assets, just so you don't have to go through a process a bunch of times. Like that's one core consideration. It's just like make it a non-cash asset because the tax piece is going to be the same. The donor experience should be relatively similar. So you can update those things all at once. But other than nonprofits who are like holding on to the crypto, it's just as simple as taking stocks or anything else. You're just saying that this is a type of donation that we're willing to accept. It shouldn't be more complicated than that. So long as your solution is automatically converting it to US dollars, which is what ours does. If you're holding on to it or you're making decisions around like when to sell or you're building some endowment on top of it, you have layers of complexity on top of the original consideration. But it's a simple thing to do. We've got some boilerplate stuff.
So building on that, I do want to make sure that we're thinking through some of the risks and helping people to answer the questions around that. But why don't we talk a little bit about some of the strategies that you have recommended and worked with organizations on as far as stewarding those crypto donors? So not only, updating gift acceptance policies to accept crypto, how do you actually go about finding those crypto donors and appealing to them? You mentioned needing to be good at the internet and having social media. What are strategies you've seen for organizations to attract those crypto donors and then actually create meaningful stewardship experiences that might be differentiated from their regular stewardship plans?
Yeah, it wouldn't be one size fits all. It comes down to the way you, like I can just, I guess, give examples so then organizations can extrapolate from there based on what they identify with. So an example being like we had a conversation, I guess, I guess it's fine to name names. So like MDA is an example. We had a conversation with them last week. They have their telethon, right? It's an amazing event. They've got like DJ Khaled, Ryan Reynolds, like everyone comes to that sort of a thing. So they were coming in and they were talking about kind of, they haven't used Reddit and these other fora type areas. Like, how do we sort of start penetrating into these areas where crypto users hang out? And there were a lot of nonprofits use. They start kind of crypto first and back in, which is not the way to approach it. You should really start with how you fundraise. So it's just like identifying, and this goes back to the first half of your question, like what are the threats? Biggest threat with crypto is time, right? Because it's fun and like everyone knows it's fun and it's very exciting. Like everyone's press release about taking crypto, other than one nonprofit we've worked with who had like a really exciting research breakthrough. Nearly 100% of the time, if you do a press release on crypto, it outperforms everything else you're doing. It's just more exciting than everything else going on for whatever reason. People like it, they find it compelling. So your team could do that too, right? You could start getting into this kind of flashy stuff around like NFTs or wanting to have a DAO. Like it can start eating into headspace. So you need to have a really good understanding of like, how are we going to graft this onto what we do already? Back to the MDA example, like the conversation was pretty easy with them where it's like, we should really be focused first and foremost on the telethon. Like you have all these celebrities, you have all these big brands, you have this really big moment of heightened attention. Would a crypto exchange or company want to be a sponsor for something like that? It's like, yeah, that sounds pretty compelling versus trying to get them to sponsor some new crypto specific event you're launching or getting into Reddit. Would a crypto influencer want to be a part of that? Like, yeah, I mean, if you're the CEO of Coinbase or whatever, would you like to stand next to DJ Khaled in some video for a charity? It's like, probably. It makes it a lot easier to get them to a yes. So like they have this amazing, compelling hook. It's like, we should really start here. Like, just forget about what happens with crypto. You have a corporate sponsorship angle and you have a high net worth, high value donor / influencer angle. Let's look at like how we can have a crypto specific space for them as a part of this event that we can hook them into. And then, you know, let's blast that out and see if anybody's interested. Like that would be one example versus like another example would be, I guess, orangutan outreach. Like there was a NFT project called Bored Ape Yacht Club. Orangutan outreach just was like, you know, this seems to be parallel to, you know, we're an ape-related nonprofit that's getting into crypto at the same time. They were a $500,000 a year budget organization, and it worked. So that's like a shot on goal that they took rather than trying to build a crypto following from scratch. And they, through that relationship and some NFT and crypto fundraising, were able to triple their budget like in a year. So they raised over $1 million in crypto after having raised 500 grand total the year before. So that was then 500 grand plus on top of the $1 million they raised in crypto. It was like an amazing outcome. So like those are like very obvious shots on goals. And then for other organizations, it's like if you have a really big major gifts program like Wall Street or tech related overlap, getting the crypto option in front of those folks or creating a space for them there is more important than like, we don't use social, but we're going to start tackling Twitter because crypto users love Twitter. That's their main social media outlet. It's more a matter of, are you good at Twitter? Because if that's the case, then yeah, like American Cancer Society last year just posted that they were taking Doge, and it's their best performing social post of all time, besides I think like 2 celebrity death announcements. It's you got to find, I guess, where your spots are and what works. A lot of the smaller mid-sized groups are really just like, we're great at social, so we're going to go Twitter specific for crypto, or we have like a big end of year campaign or gala or event to like whatever it is. They pretty much got to sink into whatever works for you guys already. Just stapling crypto onto that is the most efficient usually.
I thought that was such an interesting point, you know, as you were talking about creating Twitter specific feeds for your crypto donors to talk about the impact of crypto giving in the organization. Similarly, creating even a crypto acknowledgement society, you know, for your donors that are giving cryptocurrency, you know, having a specific acknowledgement, but taking what you do and sort of adapting it for these kinds of donors, as opposed to trying to do something brand new for the first time that you may not have like the expertise for. Is that sort of what you're saying you've seen work with organizations no matter the size of their budget?
Yeah, 100%. A lot of nonprofits want to like create a crypto thing. And it's rather than like American Cancer doing the Cancer Crypto Fund, where it has all the look and feel of crypto thing, but it's really just them saying they take crypto. And then they're going to take the crypto part of their fundraising, they're going to apply that to a separate set of grants that they report on separately, separate leaderboard, separate call to action, and then they'll plug that social campaign into their other stuff. And then, you know, 7-figure plus crypto program comes out of that, getting like companies and organizations to be the first ones to put $1 million into this crypto specific channel that's going into their existing research funding pipeline. It's like they didn't have to build a new program, they didn't have to create a new grant space, they didn't have to create a crypto specific event. They're already doing all the stuff that works for people who want to invest in that. They just made an area for crypto users to come through specifically and get reporting on their impact specifically. That tends to be it. It's just a matter of like, what's your best hook and weapon that you can use to plug into that? And then you start from there. Yeah.
So we're getting a couple of questions in the chat about your services and how you are talking about non-cash and receiving crypto donations Can you talk about when you do work with a nonprofit client, the process you go through in onboarding and some of the decisions they need to make about working with you and what you have as far as the platform is, and then some of the additional services that you've developed to partner with nonprofits?
Yeah, I can show a demo of like what the actual product looks like, but in terms of the onboarding piece, it's the same as opening like a institutional brokerage account for the most part. So like the main thing to understand is like you want to think about what cryptocurrencies you take and using what platform and in what way, right? You want to make sure that you're not getting donations from sanctioned countries or blacklisted addresses. You want to make sure that it's SOC 1, SOC 2 compliant, comply with all of the regulations that any other financial institution would be. So like any major crypto exchange for the most part has most of those pieces. The reason we use Gemini over other exchanges who have a lot of those building blocks is like, one, they have a crypto philanthropy specific team now that applies directly to us. So pretty much their account managers and their onboarding process, they let us shape one that's for nonprofits. So you're not just getting thrown to the same person who's like answering some, 20-year-old's question about how they, leverage trade some altcoin. So like that piece was important, the application, that process. And then in terms of getting questions answered and what that looks like when it plugs in, we just hook that exchange account into a widget, which I can show, that just copy and paste on a nonprofit site once they get their account approved. And then that's the donation flow. Donor just picks the crypto they want to give, enters their details, gets a wallet address where they send the donation. And it just like takes all the complexity out of the generation of dynamic wallet addresses, the receipting for the donor, the pulling in of that donation information, reconciling it with the exchange data, all goes into a dashboard. So nonprofit just pulls reports out of a dashboard, donor gets a tax receipt, everything else kind of gets taken care of in the gateway.
What about some of the decisions and thinking about risk, concerns around anonymous donors where people may not know who is actually giving them the funds, through the platform, and even something as technical as what happens, as you're talking about a donor makes this seamless, amazing donation, what happens next to the cryptocurrency once it's on your platform?
Yeah. The main, I guess, in terms of like crypto once it's on the platform, like you're saying what happens in the donation flow, right? Like more or less like the crypto gets sent to what's actually occurring.
Yes. Yeah. People are sort of asking about the journey here and what are the things that are automated that you offer and what are the choices that nonprofits have about what happens once a donation is made to them through your platform.
Yeah. So the choice piece is simple in terms of like what you're getting is US dollars as a nonprofit. So donor sends the crypto automatically converts to US dollars. The US dollars get pushed to the nonprofit bank account that they hook up. And that's it from the nonprofit side. If a nonprofit wants to hold crypto, like we do a lot of treasury management stuff with nonprofits, no nonprofits we work with hold the crypto they receive. They liquidate the crypto and then they buy crypto positions strategically as a part of an endowment. In the same way, like a university, their endowment isn't just the property they've been donated. Like they receive property and sometimes they'll decide to keep something or whatever, but it's usually, they're getting the US dollar value of whatever gets donated in, and then they're building an endowment based on their own investment strategies. So if you want to hold crypto, like all of our nonprofits will then use a tool that converts it to US dollars, and then they'll just purchase stable coins and earn yield or invest in other cryptos. But that's still, again, exceedingly rare. That's mostly universities and foundations and groups like that. From the process standpoint, like what's happening is the donor, when they get to the end of the widget, it's generating a dynamic wallet address from the Gemini exchange account. It's now tied to your EIN and 501c3 so that the closing of the loop is actually compliant. A lot of nonprofits in the early days would just like pop open a wallet and then they would take the donation from a donor. And then like one, they would have to now open a new exchange account to move it onto an exchange that you can convert it into and out of US dollars. And then two, the donor, if they go to the IRS and they're like, I gave this to a 501c3 nonprofit. And the IRS is like, where is the paperwork that that's a nonprofit account? And it's like, there is none. That's not great. So that part is really important that there's an exchange account in there. The dynamic wallet piece is an important secondary layer. That means every crypto user gets a new wallet address generated for them. That means the users who are giving you donations can't see the full wallet history of your organization. A crypto wallet is fully transparent otherwise, so they can see every transaction in and out. It makes it a security issue if you're holding cryptocurrency, obviously, because they can see that it's a honeypot. And then two, it also subjects previous donors to transparency issues where you're showing every new donor, every other donor's wallet address, which donors don't like. So like, that's why we designed it that way. But when they click send, they're just going to any crypto exchange account that they have, entering that wallet address we generate for them in the to field. They click send and it goes to the nonprofit. It's hitting the accounts. The account is set to look for a balance. If there's a crypto balance, sell it for the going rate on the exchange based on, liquidity in the order books. It sells for US dollars. A US dollar balance is then sitting in that account assigned to the charity. That US dollar balance gets pushed to the charities on a biweekly basis. So the flow
all
is,
of that is
seamless.
automated. There's not like
Yes.
a CFO who maybe is on the beach somewhere on vacation and is like scrambling to do this through your platform. All of these things are automated. It doesn't rely on the markets opening. This all happens. They make a donation, it's converted. The cash goes, straight into an account, and then nonprofits receive it on you said a weekly basis or a biweekly basis?
Biweekly, yeah.
Okay,
and then the donor gets an automatically generated receipt. And then in the event that a donor is coming through trying to give something that isn't listed in our widget, we have something called private client services. That's when donors like send an NFT directly, or they're trying to send a smaller mid-cap cryptocurrency. The nonprofit wants to accept something that's non-Gemini listed, that we have a series of donor advised fund partners that have different cryptocurrency accounts for more complex situations, so that nonprofits don't have to like individually open a zillion accounts or try to deal with these weird kind of uncommon scenarios.
And then let's talk a little bit about risks and the choice that we've talked about that nonprofits have with your platform to accept anonymous donations or not. Again, similar to maybe what they would have in a more general gift acceptance policy. Can you tell us a little bit about some of the risk measures that you have in place, in addition to the one that you mentioned around a dynamic wallet, and how organizations should be thinking about that, especially if they're concerned about anonymous donors who may have nefarious backgrounds or being able to really manage that?
Yeah, you don't have to, is the thing. So we always get questioned on that because like most of our nonprofits accept anonymous donations. If you don't want to take anonymous crypto donations, just turn it off. You just tell us when you onboard what you want. And if you want to change it eventually, you can turn it on or off whenever you want. You just ping us. The majority of nonprofits do accept anonymous crypto donations just because of like crypto cultural standards. It's more of a normal way to send a transaction. But the vast majority of major donors do leave their information even when they have an anonymous option. So like most of the anonymous are usually on the smaller scale anyway. It's a convenience thing, more of like a user experience. But no nonprofit on the platform at any point needs to allow that as an option. It's more just like if it's in your gift acceptance policy and you do that anyway, then keep it. And if you don't, then don't go through hoops, just don't have that option on. And then if you eventually decide that that's an important thing to have from like a human rights standpoint, right? Like as we get, I think of examples, we did an op-ed pretty recently where there's just like a closeted person sent a seven-figure donation in cryptocurrency. And they were saying like they've always wanted to make a major contribution, but they would never do that if they had to link their personal identifying information to a transaction of that level. And they were finally able to do this because they're not out, which we thought was a cool kind of human rights opportunity, or they're trying to support something, but they live in an area or they're part of a community where they feel like they'd be, they live in a liberal place, they're given to a conservative, or they live in a conservative place, they're given to a liberal type organization. There's all these sorts of notes we get from anonymous donors where they're like, this is pretty cool. The reason that that's allowable and nonprofits aren't concerned about it is because donor forms don't make you more secure. They just tell you who the people are based on whatever they're telling you in that form. It's not the form the FBI uses or the DEA. It's not the form that regulators use to authorize transactions. It's very similar to like if you go into a CVS and they're like, do you want to give CVS your information so you get like a saver card? That doesn't change the degree to which Visa is monitoring a transaction network. So it's really just a cognitive like misconception. If you are a nonprofit who just wants to have that to make it less likely for donors or like a bad guy to give you money, that's the case. But like if they have a legal bank account and they're sending you a transaction in the traditional financial system, like they're going to be able to send you money anyway, even if you have a form, or they're going to have their transactions blocked, which means the transaction wouldn't go through. Like a form isn't actually a security layer. It's more just a gift acceptance policy thing. So that's why you see like a Save the Children or United Way Worldwide, like these gigantic organizations taking anonymous gifts. It's because it doesn't increase your security at all. It's the exchange is responsible for blocking or authorizing transactions, and criminals get caught when they get caught, or if they're not caught, then you as a nonprofit are probably not going to catch them, you know? So
You have a process in place though to make sure that gifts aren't being made from banned wallets, right?
the exchange, yeah. So like
Okay.
it's not like we have a crypto payment solution that lives on an island. Like we work with just the most compliant and like hyper regulated exchange, so that like the system that's actually processing these gifts is like under the exact same regulatory framework as any bank account you're using. So if it's a sanctioned country, a blacklisted unit of cryptocurrency or a wallet, all of those things get taken off the network. And then all of these exchanges all around the world have this connected network through the regulators in different countries, and they share that information and then keep that system safe, similar to the traditional financial system.
Great.
Yeah, it's like your coffee shop, you're probably not going to like know that someone stole someone else's credit card when they swipe it if like Visa doesn't know that. It's really kind of
Very
up to the payments. Yeah.
So these are really important risks for organizations, especially if their director of operations or CFOs are trying to make these decisions and assess these risks. Some of the other concerns that we have heard from organizations that are thinking about starting to accept crypto have to do with a couple of things. One is the environmental impact that it has.
Mhm.
So could you tell us a little bit about, how organizations should be thinking about and talking to, their board members or whomever asking these questions about the environmental and potential negative environmental impact? And also, if you can talk a bit about the perception of equity in cryptocurrency and whether or not this is something that's equitable and if they should be concerned that it isn't.
Yeah. On the environmental piece, it's just kind of like it's again sort of not a it's like a bit of a logical fallacy. So it's the example that we've been giving recently. It's like if a Tesla, like every time a Tesla hits a person, there's like calls for you to stop producing them, but there's never like a let's take 10,000 hours of human beings on average and then 10,000 driving hours of a Tesla and see which is safer, or look at like the trajectory and see like when that's going to pass that and ultimately increase safety. The same thing's kind of happening with crypto, more or less. So like, is crypto super efficient? It's like, no, it's not nearly, or at least proof of work cryptocurrencies are not energy efficient. They disproportionately use renewables in a way that other technologies don't, but it still takes more energy than it should on like a per block basis. But I haven't seen like anything that I find compelling to say that it's like less efficient than say your traditional financial system. So it's just kind of a logical fallacy, right? Like you're taking credit cards and there's just like an infinite series of skyscrapers with air conditioning and like millions of cars driving to and from to do the jobs that are getting replaced by like the code that Bitcoin is just using, because there's miners that are just running that code that replaces the millions of people that have to build and operate the alternative financial system. In terms of like what's more energy efficient, I don't know. They're both pretty horrific, but like cryptocurrency is at least on track to be much more efficient, because like as that process becomes more efficient, it's not like you need again millions of people in skyscrapers. So it's a bit of a waiting game. Like technologies aren't as efficient as they should be when they start. Not everyone had, but people had computers that were like taking up half a room a couple of decades ago, and then stuff gets better. So like we're definitely excited for it to get more efficient. We wish it wasn't inefficient, but it's, as far as we can tell, it's like illogical to say that it's unethical to take it, but like accepting credit cards is ethical. It's just kind of like it's a new thing, so people arbitrarily assign it more weight on a per transaction basis. It's relatively obvious though. Like our biggest growing client demographic would be environmental organizations, because they're like moving into this carbon offset piece of it. So I guess last thing on that is it gets more efficient as it scales. So there's not fake statistics, but misrepresented statistics, like how much energy an individual transaction takes in crypto. When they say individual transaction, they mean a block, which takes the same amount of energy regardless if it has 100,000 transactions or one transaction in it. So not using crypto doesn't make it any more or less energy intensive. And the more people use it, the more efficient it becomes. So on a per transaction basis, environmental organizations know that like they're not adding any negative to the existing cryptocurrency ecosystem by taking a one-off donation, and like the 100 grand that they're getting in crypto that they use for environmental causes is obviously a net positive. So a lot of environmental groups are actually like steering into the storm and then like using it to be like, we want to be a part of crypto's carbon offset as it becomes more efficient. And they're using that as a means of like hooking crypto donors in to sort of become like a carbon neutral ecosystem.
That's really interesting. What about the equity issue? How do you think about that? How do you talk to your clients about that when they have questions around this?
Yeah, could you clarify, I guess, when you say equity in crypto versus like the traditional financial system, like which, when you say equity, what do you mean?
Yeah, I think, for a lot of organizations, they've been thinking a lot about DEI related issues and focusing in on many levels, building better boards, building better teams, and thinking about engaging broader communities and more inclusive communities in fundraising in general. So, how does crypto fit into that? Like, do you think that this is something that, a lot of different kinds of people are using? Is it inclusive? Or, are there still populations that are just left out of this in the US?
Yeah, it's self-selective, which is good. It's not like an existing system. So it's like the one plus side, and the reason crypto is more diverse than like traditional finance is like you're not getting into crypto because of, your dad owns the firm or whatever else it is. So like the straight white track just kind of breaks out. So like anyone who wants to get into crypto gets into it. So like for that reason, it's dramatically younger and it is dramatically more diverse than traditional finance. In terms of whether or not it's like representative, like no one runs it. So it's a matter of like if individuals want to have efforts like Black Girls Who Code and groups we work with who are trying to get certain demographics into crypto more actively, there's no gatekeeping, which is good. It's just a matter of like whether or not you're interested. So it's very similar to like women in STEM type movements, where it's like it is a choice, but then the choice becomes more difficult based on the individuals who are already in it. Like it's harder to get men into nursing historically because it's been like a female occupied space. So I think it's still too early to know whether or not like the early days of it being very male dominated, it was like all developers, and it was like heavily male for a while. It was like 90% male, I think, in a report like 5-6 years ago, and now it's like 67% male. So it's like bending back really quickly, but like how much of that legacy system makes women less interested in it because they think it's like a guy thing. You see the memes, I'm sure you've probably seen like a fratty looking guy like yelling in a girl's ear at a party, and it's just like, you got to see my Bitcoin wallet. Like people just make fun of Bitcoin bros. How much of that informs who ends up being interested, I think, is a curious discussion. But if you're looking at like a donation method versus credit cards, stocks, other finance, like is it more or less diverse? It would be definitely more diverse in the sense that you're getting a dramatically younger donor on average. And then if you just look at traditional finance like stocks and investing, it's definitely more diverse than traditional investment arenas. Is it equitably diverse? Probably not. But yeah, whoever runs point on those sorts of initiatives, you would think a lot of folks in the nonprofit sector, Code to Inspire, Girls Who Code, groups like that, can hopefully, I'm sure, do more.
I live in the Flatbush area of Brooklyn, and it's been really interesting to see so many urban stores accepting Dogecoin and cryptocurrency for retail transactions. And that's not something that I would have made an assumption about unless I was walking around my neighborhood and seeing new banners for new types of cryptocurrencies that they accept to buy hats and stuff. It was like really, really cool. We've got a couple more interesting questions I want to try to make our way through. We haven't spent a ton of time talking about NFTs. You referenced them, but we've got a question about NFTs, NFT auctions, and maybe you can give us a quick overview as to how you have worked with them, and the excellent point that you made that in order to be the beneficiary of an NFT auction, you have to accept cryptocurrency. Talk to us a little bit about NFTs and your recommendations for valuing NFT donations, how organizations should be approaching this from a best practice perspective if they have these opportunities or are interested in it. That would be so helpful.
Yeah, this is one of those areas where like it can potentially be a time suck. It depends on like how much innovative stuff you're doing, because there's like a hurdle I guess you have to get over to get into certain layers of it. But there's some very easily accessible areas of it that like any nonprofit can leverage to fundraise. So I guess like one important distinction there would be like, so in terms of our client base and what informs this, like if you look at like Forbes top 100 charities, like those sorts of groups, 9-figure plus, like we're at about 100 organizations that are like 9-figure, 10-figure budgets. So like $100 million, $1 billion plus. Those organizations are doing more with NFTs that is more active. So like we did an auction with Sotheby's at the end of last year, which was like a really big event. Sotheby's and auction houses or clearinghouses getting into NFTs was a big thing in Q4. But then we have the small nonprofits like Orangutan Outreach or whatever, just like partnering with these individual projects and creators. The platform level stuff that's being done, where like NFTs are being minted on behalf of a nonprofit, they have their own NFT initiative or their own NFT gallery. That can get done further down the road, but like 95% of donations we received, and we now get millions of dollars of donations every month from the NFT community. 95% of those donations come in crypto, not NFTs, which is kind of confusing. It's the proceeds that NFT platforms, studios, creators, traders, artists get from their NFT ecosystem. And then that other 5% is they have like a really hyper appreciated NFT that if they liquidate it, they'll have to trigger a taxable event, and they'd rather transfer that directly. That's where we use our, third party network, like a Renaissance Charitable, America's Charities, these DAFs that we work with for these unique cases that they're individually getting expert at. That's where those gifts come through. And then we ran NF Tuesday after our Crypto Giving Tuesday. We did an NF Tuesday the week after, and we got a couple dozen NFT platforms and studios and creators to like launch NFTs where all the money went to charities, and that raised millions of dollars. But in short, you don't have to make your own NFTs or get into it. If you are individually interested, you're like an art related charity, you can. But generally speaking, it's the same way with crypto, where like you're looking at these folks who are out there, a platform, a partnership with an artist, a creator who has some alignment with you. And then they are creating their art, creating crypto proceeds from whatever event is going down where they drop those NFTs. And then those proceeds come back to the charities in the form of a crypto donation. Like that's the main thing that goes down. And that's where the small and mid-sized charities make like the majority of our base have like gotten into it. But some of the bigger ones are definitely doing their own like auctions and drops and stuff, which is cool too.
That's great. Thank you. And thanks for the question around that as well. Really interesting to hear. And something that we got in the chat as well, it is around, an example of large organizations that are using crypto, philanthropy really effectively and how they're thinking about it. To me, it sounds like you already talked about some of the indicators of you don't necessarily have to be an organization with a certain revenue size to, accept crypto philanthropy or think about crypto philanthropy as part of your fundraising strategy. You do need to have some things that indicate that you will be successful in it. But, aside from, okay, you don't have to have a certain size budget to accept it. Can you talk a little bit about a case that you've seen of a large nonprofit organization, let's say over $20 million, that is accepting cryptocurrency and is doing a really great job at it? What are they doing right?
Yeah, I mean, over 20 million, that's probably like half of the, like now close to 1,500 or so nonprofits. Like, I don't know where people set the bar for large. We usually set that closer to the 9-figure mark. Like small, we do like $1 million, like around that area. And then below that, usually sometimes it can be scrolling in terms of stability. The larger nonprofits, like if we talk about PETA, American Cancer Society, Save the Children, United Way, World Vision. You can go down
you work with some of these organizations, right? These are all organizations. Yeah. You work with all of these, or even better. Okay, so not just from reading about it, from actually working with these large organizations, how they're approaching it. Okay, thanks.
Oh yeah, again, like organizations with $100 million budget or greater, like we have over 100. So if you look at like the Forbes top 50 or whatever, you just take the top 20, like more than half of those groups are all building crypto fund. Like if you're a really big organization, you don't have a crypto fund program, like that would be silly at this point, just because there's so much money in people. It's like if you're that big and you're not into crypto after it's the best performing asset class of 10 years, that would be absurd. Even the ones, some of them don't work with us, but everyone who's on that list is doing something with crypto, I'm assuming. For small and mid-sized, like you can't do everything that's interesting, right? Like you have to be more careful about what innovation you get into. But for the larger groups, again, like the Cancer Crypto Fund, like establishing an identity with them was something we worked really hard on at the end of 2020. And then we rode that into 2021, again, built, like getting to that 7-figure program was like a really big priority for them. And it was super doable with like pretty light lift. Save the Children United Way, we've been working with for a multi-year period. Save the Children was our first big blue chip client that we worked with. So they have a really serious program. Like they had a HODL Hope campaign that was specific to crypto toward the end of last year. Like they're getting op-eds published, like they get asked to come speak and stuff. They're much more integrated in the community. Same thing with United Way worldwide. Like they were one of the first charities to take crypto. So they've been building a really consistent program over time. But in short, I guess for those bigger charities, it's really kind of attacking pillars is what we focus on. So it starts with an end of year campaign that makes sense. In the month of December, people are going to dump bags of cryptocurrency, but we see quarter over quarter growth. Like our Q1 last year outperformed our Q4 the year before. Like the space is growing to even outpace the big surges at the end of the year, but they focus first on that Q4 goal, right? Like what are we doing at end of year? What does our email campaign look like? How are we nurturing crypto donors throughout the year? How are we kicking off building a match going up into Crypto Giving Tuesday, launching that on the day of, using that to hook donors and to take the Crypto Giving pledge, activating those gifts going throughout the month, getting donors to whitelist well in advance of the deadline so they don't miss out on sending a gift because they just didn't prepare their account to make the actual transaction. Those types of organizations can think through all of these steps with us slowly over time. And then like once they get that game plan intact, they're like, let's look at the 360 year-round view of how we use our major gifts program to pull in more crypto. And like, let's think about like our corporate philanthropy program. It's like, how do we get crypto companies to sponsor all of our major events and like make a space for them there? And then it's like, okay, let's get into Reddit because like all these crypto users are on Reddit and they start building a presence and establishing themselves. And in the same way, Wendy's becomes like a hot, cool Twitter account. They start like really building a presence in the community. Some of them have Discord channels. These are very far steps down the road for like bigger groups, but it all starts with, again, search engine optimizing their page, creating blog posts and content to draw people in off the internet, creating a crypto giving experience that's unique to that nonprofit, a leaderboard, a call to action, every $100 in crypto equals X amount of impact. We build out really like a universe for a crypto donor to come through and they're like, hell yeah, I want to be a part of that thing. Regardless of the crypto, it's really just like fundraising best practices and a good call to action. And then the cool crypto strategies come after that. So like we fund police usually for a quarter or two until everything is like, now we have this thing when we ask a crypto donor to come in here, they're like, oh, Jesus, yes, please. This is cool. I'm in,
That's a wonderful way to conclude our conversation today. Thank you, Pat, for sharing so much expertise. I think there are probably 1,000 more questions that people have, and I know we weren't able to get to all of them. But thank you everyone today for joining this conversation. I hope you found it interesting and helpful. We will be sending around a recording of this as well as our contact information. So if you have follow-up questions that we weren't able to get to or want to talk about crypto philanthropy strategies, feel free to reach out to Pat and the Giving Block and to me at Orr Groups. Happy to meet with you and talk about it further. I also want to make sure that I mention our next Orr Group talks, which will be taking place on February 24th. And we'll be interviewing Aisha Alexander Young, who is the Chief Executive Officer at Giving Gap, to discuss advancing racial equity in giving. So thank you again, Pat. Thank you again, everyone in our audience. We'll be sending you a follow-up email shortly, and we hope to continue this conversation. It's changing a lot, so there's always going to be more to talk about. Any wise closing words, Pat, from you that we should be thinking about?
No, I mean, look into it. If you're curious, like we have a website, go to thegivingblock.com. You can book a demo. If you don't want to get pitched, you can just read and, be curious. Fit crypto into your existing innovation plans, right? Like it's not like you don't have to cut the line. You can do other things first, but you should definitely have it on your radar at this point. It's a big deal. Even if you get to a no, like my recommendation would be like get to a yes or a no quickly, just because you're early at this point. So there's a lot of upside if you get in, and if it's not a good use of your time, just clear out your headspace and decide against it so you can move on to other interesting stuff.
That is wise advice, probably on a lot of fronts, but specifically for crypto philanthropy. Well, thank you, Pat. Thank you, everyone. And thanks again for joining our Orr Group Talks today.